Nicola Willis's new budget has thrown Kiwi businesses a bone. This week, we're going to cover off investment boost, what it means for your business, how to use it properly, and some common pitfalls that you need to know about.
We're back in your life with Amanda the accountant, back by popular demand to talk about National's announcement about the investment boost. Amanda, welcome back to the poddy.
Thanks for having me.
Amanda, you're known to us as Amanda the accountant, but you do have some nicknames. Amanda the accurate accountant.
Amanda the accountable accountant.
Amanda the analytical accountant.
Amanda all about the bottom line.
Amanda adds it all.
Amanda the asset aligner.
Amanda avoids audit anxiety.
I think that's enough.
I don't know if going to ChatGPT for my nicknames really counts as being known by something, but sure.
Yeah.
All right. Amanda always ahead with the accounts. The government has come out and they have said, we're going to give small business, or any business really, a bit of a boost when they're investing in stuff. What does it mean?
So the investment boost has been brought out as part of the 2025 budget. And so basically what it is allowing for businesses to do is purchase new assets, claim 20% as an upfront deduction. So that's basically 20% of the cost being claimed immediately and then still being able to claim depreciation during the year for use.
I'm going to ask the question that everyone has asked me. Does this mean I get 20% off?
No.
Thank God we've cleared that up.
Yeah, so if we think about it for, let's say, a $10,000 asset, any asset for now.
Yeah.
So $10,000 purchase price, you get 20% as a deduction immediately. So that's $2,000 as an extra expense on your profit and loss.
Yep.
Your cost base for the asset is now $8,000.
Yep.
And then you get to depreciate it at its normal depreciation rate for the rest of the year.
Yeah. So let me just go out and clear this up a little bit. This does not mean your Raptor Ranger goes from being 100 grand to 80 grand. It just means that you can claim slightly more cost and pay slightly less tax.
What are the odds that people end up making some pretty stupid decisions off the
100%.
Yeah.
Yeah.
Quite high.
Is the odds. Yeah.
Yeah.
Yeah. That's why we're doing the episode. Let's be honest, because we have had a lot of people get in touch with us straight off the bat and go, I need to now go out and buy assets. And the other thing is, I think people are imagining that this will go away soon, right? There's like this flurry of activity. I'm like, as long as the government is still here, it's likely that this won't change.
Yeah, there hasn't been any indication that there's a timeline on it. The only thing that's changed is that it's got a start date, which was last week.
Yep.
And from that date forward, you're able to claim this investment boost, but you also don't have to. So it comes down to the decision making behind the business and what the best option is going to be, particularly for the asset class that you're purchasing.
Yep.
And whether it's actually going to bring you a benefit, because at the end of the day, purchasing the asset still has the cost.
Yeah.
And the tax saving is only the tax rate of that investment boost that you're getting.
I see like quite a bit where people just really focus on the tax piece and how can I mitigate it. But you're right, it is a cost. You run your business, you're trying to derive a profit. Tax is not a bad thing. It's probably for those that are on like kind of the fringe of like, do I do this thing? Do I not do this thing? Essentially, that's why it's been introduced, right?
Yeah, 100%. So, I mean, if you're a business and you're thinking of upgrading something for whatever purpose that might be. So if you're in manufacturing and you're getting to the end of the life of products, assets that you're using to make your product, or, you know, if you're a business that's needing new laptops and you're on the fence, right? It's a lot of money to outlay to go and purchase the new assets. You might go, actually, I will do it this year because that extra efficiency that you're going to get is going to help the business overall, and it's worth spending the money. You do also get this investment boost. Is it a reason to go out and spend $100,000 for the sake of it? No, you still spend $100,000.
Yeah.
And if, let's say I run a service business like I am a mortgage broker. Would a new Raptor Ranger help me sell more mortgages? Probably not, right? So please make smart decisions, even though the tax outcome's a little bit sweeter.
I wonder how much of it is going, like, it'd be great to see the percentage that actually help grow the business versus fun toys that are running through.
Yeah, I'd just love to see the amount that goes on Ford Raptor Rangers. I see them everywhere. It's unreal.
It is an interesting one, right? Like the investment boost does apply to assets that are partly business, partly personal. So if you're buying something that's, say, 50% for your business, 50% for you personally, such as a car, which sometimes people do, you still get to claim 20% of the 50% business portion.
Yeah. And if I am saying it's business because I work in an office and I'm driving to that office, is that a thing, Amanda?
No.
Exactly.
It's not good for us.
Yeah.
No.
Hey, so we've covered kind of what it's meant to do and maybe some stuff that is included, like things that help the business. Is there anything that's excluded?
So residential properties, land, and secondhand goods.
Yeah, nice.
What about the government's announced that they're going to buy a couple of new planes? Some might go, this is very convenient, this 20% while buying the planes. Surely they'll save a couple $100 million in tax by doing that?
Where are they buying planes from?
Oh, I don't
I'll be
know.
secondhand, absolutely.
But in New Zealand?
We don't have secondhand planes
I
lying
don't
around.
know. Do you think I know about planes?
Maybe we do. And we're going to talk more about those planes after the break.
The new investment boost could mean thousands back in your pocket, but only if you structure it right. Lighthouse Accounting can help you figure out what to buy, how to structure it, and how to maximize your deduction. Get in touch via the show notes below. Now back to the episode.
So Amanda, tell me a bit more about planes.
Not too familiar with planes, James, but I can give you another example. So if we're to think about a business buying a $2,500 laptop, say, the investment boost you could claim would be 20% of that. So that's $500. So $500 going on your profit and loss as an extra deduction. Your cost base becomes $2,000 for the year, and you can claim depreciation on that. So typically 50% depreciation rate means that, there's some mental maths going on here, maybe $800 or $900 for the year, depending on how many months you own it for.
Nice.
So bit of an extra deduction for the year, right? But that's in a laptop. If you think about something that's a more expensive capital asset, something that costs, say, $100,000.
Like a plane.
Yes, like a plane.
What are you getting? You're not getting a plane for 100 G's. Let's say you're buying a piece of machinery.
For $100,000, cost base goes down to $80,000 with that $20,000 extra claim for the investment boost.
Yeah.
And you get to claim depreciation on that. The part to think about, right, is that you get to claim these deductions if for whatever reason you might be selling that in the next few years and the asset value isn't going to reduce as much on the open market as what the depreciation has caused. You will end up having an additional profit, an additional income line to add of depreciation recovery. And so that's one part of the investment boost that isn't necessarily understood.
So effectively what we're saying is if you depreciate the asset too quickly because you started 20% lower and the actual value of the asset in the market hasn't come down, could be an extra income.
Yes, once you're looking to sell. So that doesn't happen so much with
Raptors.
Funny you actually bring up Raptors. Thanks to ChatGPT, I've looked into this. They depreciate 10 to 25% over a 5-year period compared to a Ford F-150, which is more 44 to 54%. So there is risk with your Ford Raptor in the situation.
Yeah, fair enough. For all you traders out there with the new Raptors, I don't know.
Watch it.
Buy a plane. All right.
Is that the advice from this episode? Buy a plane?
Oh, yeah, absolutely. All right. So how do we maximize our claim and avoid costly mistakes? Amanda, you've got a list. Should we run through them? I want you to provide some commentary on them.
Yeah, so you want to make sure that your purchases are for what the business is wanting to do. They're actually aligned with the business and you're not just buying it for the extra 20% back because that's not going to put anything extra in your pocket.
Yep.
You want to think about if the 20% claim is actually worthwhile for you. If you have an intention to, say, sell your business or sell the assets in the next couple of years, you might be looking at reducing your tax in the current year and then having to pay more tax in a future year because you have to include the depreciation recovery.
Yeah.
And then also thinking about, what's the personal component, if there's a business component, making sure that's structured correctly. And then each asset can be treated differently. So you might choose to use investment boost on some assets and you might choose to use usual standard depreciation on others.
Yeah, it sounds to me like you should talk to your accountant.
Yep.
For sure. And I think the way I think about this, there's equal opportunity as risk probably for the country as a whole that we can get on and probably stimulate the economy a bit more, but people will spend money on things that they don't really need and just go, I can save some tax, but they've still got the expense.
Yeah, I think the investment boost is a really exciting change in the budget. We should be seeing businesses spend some more money out with other businesses, which has a positive flow on the economy, right? But there is the risk that you do it incorrectly. It's not quite aligned with your goals. So if you're unsure, reach out to us at Lighthouse Accounting and we can help you decide if it's the right choice to use the investment boost this year or not.
Yeah, 100%.
Awesome. Well, Amanda, the amazing accountant, thank you very much for your time. Much love to Lighthouse Financial for sponsoring this episode. Make sure to subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.